All right, here we go. Today is Monday, September 25th, and stocks stumble again. It's been a rough month for the stock market. So, when will the markets finally rebound? Okay, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. If this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. And we are real traders who trade live accounts. So therefore, we got a lot of trading experience and we're showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And Mark, what the heck is happening? Where is our 4,350 level in the S&P that's supposed to hold?
Nah, it's a 4300. We were overly optimistic about the 4350.
It almost seems this way. I mean, September has been a pretty bad month for stocks. I mean, this is the second losing month in a row. If we switch to a monthly chart, we see that the previous month we were down 1.7%. Right now, I mean, we're heading into the last week of September and we're down 4.4% in the S&P 500. So, doesn't look like we can turn this one around.
It would be a pretty significant comeback for that to happen. Down 3 weeks straight, working on number four for the S&P 500, and you know, September historically is a bad month. Should we have not traded in September? Should we have taken a vacation, Marcus?
Heck no. I mean, August was my best month for the year, and September is right now chasing August. I mean, we'll count in 1 week, but it's looking good. I'm liking it. I'm liking it, especially since we see that the volatility is finally a little bit higher. So here we're looking at the VIX, the fear index, and we are right now at 18. That's a pretty good level here. I mean, we have been as low as 12 and a half. Finally
Yeah,
back where we can collect some premium.
yeah, the volatility getting back into the market is definitely a good thing. I think for trading in general, but especially for options traders who are selling options, and that's what we like to do here. And historically speaking, I want to say that 1750 over a 10-year period is about average. So we're getting back above an average level after just being at historic lows, really.
Yeah. So let's talk about it. Well, what's happening in the markets right now? If we are looking at the economic calendar, we see that this week there's not a whole lot going on. I mean, tomorrow we have consumer confidence. We have the final GDP. I don't know if the final GDP will be a really market moving because the GDP reading comes out in in three different phases, where basically it's what the preliminary, then something else, and then finally the final GDP. Um, but I don't think that this will move the market. It's probably Friday.
I agree. Unless there's just something crazy like that traders didn't anticipate. It's really about Fed commentary and then Friday's core PCE. With Fed commentary, there are going to be little nuggets that come out during the week with from other Fed members. Like we had a Fed member, who was it? Chicago Fed President Goolsby said that the Fed is likely getting closer to the point where it could keep interest rates steady through, or though at a higher level than the market is used to. Quote, so we're just going to have to play it by ear, how much is still coming down the pike versus how much was expected and was already in there, he said in an interview. So we're going to get little nuggets from Fed members, but really the big one is going to be on Thursday.
Yeah, Thursday we have Powell speaking in the afternoon, so that could be another market mover. But then Friday, the core PCE price index, that's the Fed's favorite inflation gauge. I mean, this is where Powell recently dissected the core PCE price index and what they're looking at. So this will be probably a big one. And until then, I mean, there's a few other things that market participants are focusing on. I mean, first of all, we have the UAW strike that seems to be winding out. So on Friday, there was a deadline in the automotive industry that passed. And right now, They said that Ford is the closest one to where they will probably reach a deal, but that GM and Stellantis are not playing level just yet.
Yeah, we'll have to see how that shapes up. And, it's interesting to see that GM is trading higher today, even though the overall market's slightly lower.
Yeah. And then we have also news out of Hollywood. So the Writers Guild they came to an agreement with the streaming giants, and it seems that here Disney. Now I want to say that's in line with markets. I heard that pre-market it was down because I mean writers want to get paid for the streaming content, and I think previously the contract just had I don't know movie releases, DVD sales, or something like it. Not quite sure because honestly today these are just kind of excuses of okay what can we look at today while we are waiting for the big event on Thursday and Friday.
I absolutely agree. Just trying to find some reasons to move the market and to have some buzzes with the talking heads out there.
Yeah.
Speaking of which, what do you think about this government shutdown?
Yeah, we talked about it with our mastermind members this morning because one of our members asked, okay, how will this impact the economy? And I read an article by Goldman Sachs this morning. Can't recall exactly, try to find the article again, but I'm reading this while I'm having my first coffee, so I should bookmark those. Anyhow, so Goldman Sachs looked into this and said since 1976, there have been probably 10 government shutdowns with super minimal implications on the economy. So it's, as I said, it's another talking point because there's nothing else. I mean, we just looked at the economic calendar. There's nothing going on. And then we also don't have much on the earnings calendar for this week.
Yeah, and I think it was more than 10, Marcus. I want to say it was 21, but the takeaway, I'm right there with you, right? Sure, it's not a good thing, and politicians, they better be careful. AI might take their job.
AI
But
should take their jobs.
yeah, make things a little more efficient regarding regardless of what side of the aisle you choose to put your hat on. But anyway, um, yeah, it tends to be a little more hype than actual concern when it comes to the market. When it comes to the market.
Yeah. So, I mean, here we see the S&P 500 today opening lower, pushing higher a little bit, filling the gap between Friday's closing price, now a little bit lower. So we see the S&P down 0.2%, the Nasdaq down 0.15%. The Dow, the weakest of the three indices this morning, down 0.5% almost. So let's see how this is affecting our positions. And before we do this, we got a new trade for you. We entered a trade this morning, and you know the drill. If you have been following this show, we are trading likes for trades that we are sharing. So, if you would like to see the trade that we took this morning, click on like, and in the meantime, we will go through our existing positions. And first up here is our friend CSIQ. Little buddy, come on, what's happening here? When we're zooming in, CSIQ down now broke below the 26 level. So, should we panic?
Marcus, this isn't what I want to see. This isn't what I want to see. But it does look like we have some support around these lower levels. Short term, it was holding up, and now it's edging lower. As I've mentioned before, I was hoping that with this Fed statement, we get a little more movement and positive reaction. But now it looks like we need an earnings cycle and another Fed statement to get a little traction here. So the longer rating or high, excuse me, rates being kept higher longer based on the dot plot and Fed projections, not helping CSIQ in my opinion.
Yeah, so it seems that we need to wait another 57 days here. So we're kind of stuck in this position. But hey, this is part of the wheel strategy, and this is why we are sharing it here with you. I'm not saying that you should trade the wheel strategy. This way, you see firsthand what can happen to put to your
Yeah.
position, and then you can make an informed decision whether this is something that you want to trade, or if you say, That's not for you, and that's absolutely fine. This is why we are sharing what we are doing and what's happening with our position. NEE, I mean, this is another one like, come on. I mean, what the heck is going on there? Friday, NEE had a really good day. We got a sign at 69.50. Friday, we were pushing above our break even. We were attacking almost the 69 level. Today, pulling back again, down 1.29%. So, not being able to sell calls against our position just yet.
This one, another one, not what I want to see, but realistically, we're not down that much on this trade. It's
Yeah.
just we're outside of call selling territory. So it's not a problem. It's just not fun. It's a
It's
lot
not
more fun
fun.
when you could sell calls.
For sure not. All right, PNC, another one here. I mean, today, just around the unchanged mark, so holding up pretty well, but also not being able to sell calls. So this is three positions now where we're not being able to sell calls against.
I know. I know. It's, so goes trading.
Hey, we told you that we're telling you how it is. And this is just part of trading, exactly. And I think the important thing is that you just follow your plan. And that's what we are doing. Hey, do you have another mug today?
I no, I don't. Not today.
Not today. All right. Okay.
Maybe
So
tomorrow.
let's keep going. But again, so we have one more position, and then we did take a new trade. If you want to know what we did, click on like. This is how we trade. All right, UPS. UPS, an interesting one. Did we really rally that much today? Okay.
Oh, wow.
Wow. Okay. Well, I've watched it in 30 minutes here probably, and it seems that we are attacking this level. That's quite interesting. Okay, so UPS, let's talk about it. You got assigned at 165 a couple of weeks ago. I decided last week to sell the 157.50. On Friday, we closed below 157.50. So I got assigned, and now I'm the proud owner of UPS shares. Earlier this morning, I was looking at it at possibly selling calls, and it didn't look too intriguing because I kind of want to join you. So I want to ride this a little bit to the upside and selling calls above my strike price here. But now let's take another look at the 157.50 calls.
Yeah, that could look pretty decent.
So going over to the calculator and looking at UPS and looking at the real-time quotes here and see what is popping up here. Okay. So this is getting interesting. I'm zooming in a little bit. So I got a sign at 157.50. So I want to sell calls at against my existing strike price or above. And it seems that right now it would be able to get probably 73 cents at 32% annualized.
Okay.
Kind of like this. I'm honestly more intrigued because you have to sell calls at 162, which you can't do just yet. I wanted to somewhat join you and sell calls at 160 or 162 because I'm with you. I think that this move here with UPS was exaggerated and that we are probably bouncing back. And that's what we already see today. I mean, nice bounce against the market, up 0.83%, liking this.
Just small correction. I was assigned to 165, so I need to get a little bit higher. But yeah, I think that you're in a great position, and if you want to ride it up a little bit, I think this is one that can pop back higher over the next couple of weeks.
I want to ride it up a little bit. So I'm probably not selling calls just yet unless we pop a little bit more and I can sell calls against the 160 strike price because this way I would make $2.50 per share that I own and collect the premium. All right. Want to reveal the trade that we did this morning?
Sure, why not?
Sure, why not? Let's see. Did you guys hit enough likes? I think so. I think we can do it. PM, Philip
Yeah.
Morris. Really interesting this morning. Gapped lower, is still down 1.2%. And we actually had a possibility to sell the 90 puts. So that's what we sold. Right now, the 91 is available. So, I mean, That's fine. We took the 90, right? For 40
Yep.
cents.
Yep.
So we sold those for 40 cents. Right now, as you can see, the 91 for 50 cents is available if you want to do this. But we're liking this one. I mean, this is a dividend payer, low PE ratio. I mean, nice market cap. So what's not to like there, especially if we look at the income statement, right? And we look at the annual income statement, even the quarterly. I mean, this is just super, super, super stable.
Yeah, and I think this is a little more of a conservative play. Doesn't move a whole lot, but 90 looks great in my opinion. There is a dividend tomorrow, so it goes ex dividend tomorrow. So it's expected to drop by a little bit because of that dividend. But that's where I think the 90 would be really solid, even though there's that ex dividend date tomorrow.
Yeah, kind of like the 90 a little bit better than the 91 because if we look at this, it doesn't seem like a whole lot of different, but 90 seems to be the better support here for PM Philip Morris.
Took it. I like it.
All right, let's see of what's happening here in the markets right now. Look at this. There's some life breathing into the S&P. We are trading at session highs right now. So we are trying to climb back to the 43.50 level. And I mean, you mentioned it. This is now, let's take a look at the weekly chart. 1, 2, 3. I mean, this could be the fourth weekly loss.
Nah, markets are going to be higher this week, snapping that losing streak.
All right, all right. I'm with you on this one, but it's quite interesting because if you look at this, we are well before the 50-day moving average. So the next question is, do we have to go all the way down to the 200-day moving average, which would be right here at 4,200? And this is where some people say right now, oh, I'm probably going to go down there, or is now the time where we bounce back? I mean, we kind of broke the support level at 43.50. So let's see what happens this week.
Yeah, my guess is that we claw our way back a little bit this week, and we have a solid October.
All right. Hey, I'll take this. So if you agree with Mark, then give us a like. And if this is your first time here and you enjoyed the show, consider subscribing to this channel. Hit the little notification bell. This way you get notified whenever we go live. And we go live every day that the markets are open at 10 o'clock Central Time, 11 o'clock Eastern Time. So have a great rest of your day, and then we'll see you again tomorrow morning.
Happy trading, everybody.